Alright, welcome back everyone. So today we're going to discuss the global financial crisis, sum it up, and basically discuss if it could happen again. So we're going to look at three basically categories in which the global financial crisis happened within. So the first major issue of the financial crisis was leverage. Now, leverage relates to all sorts of companies, but in particular, banks. Now, controlled leverage is always good, but when you have too much leverage is when you become overexposed. And this is essentially what happened to the banks and the people who were taking out mortgages. So, imagine as a bank, there's lower interest rates. You make less profits. How do you make more money? Well, leverage. It's pretty simple. The more you can leverage yourself, the more you can increase your profits. The higher the interest rates, the less leverage you need. Now, how does this relate to you? Well, it gives you extra capital to use, extra gains potential, and a more diversification. So if you pretend this is more or less that you're the bank, then this is similar in a sense to investing. But as with you, there's cons. So just like you, they have extra capital to use, which isn't always a good thing because if you can't maximize this extra capital, then you may feel, well, I have to do something with it, and then this is when you can start to make bad decisions. The other issue is that just because extra gains does not mean there's no extra losses, and this is most certainly happens to 99% of people who initially take out leverage, and more options isn't always good. So if we look at an ice cream, for example, you always have the too many flavors dilemma, where people actually prefer less flavors. That's an experiment you can look up if you want. But the other one that relates to the global financial crisis was greed. So if you can imagine yourself as an investment banker or anyone that's giving out any sort of loans or anything in terms of banking during this period, the idea was that the more you can give out, the more you can earn, the better. Nobody cared about the ramifications. Nobody cared about the economy. It was all how much money can we make and what's the best way we can do it. The problem here is that you had all these bankers giving out these mortgages that they knew people couldn't handle. Why did they know they couldn't handle them? Well, they would give out these mortgages on a 2 to 3% rate to start with, and then they would hike the rates to 7 8% after a few years. So how did this work? Well, the issue here is after a few years when they got to 7 8%, people realized they couldn't afford it. So what happened? They went back to their bank, they renegotiated the mortgage back down 2 3% for another couple of years, and pow, you had the same thing repeat. How did this cause an issue? Well, if you look at the lady here, all of a sudden she's been able to get one house, she puts that one house up against the next house, and she's able to get another one. So what happens here? Well, this lady who's essentially bought two castles, realistically shouldn't have been able to afford one to start with. And this is how you had the common pattern, which is what happened. You had people buying a house, using that one to buy another house, and rinse and repeat. So because these 3% interest rates started, that's what they were packaged as. These mortgages were packaged as 3%. But the issue is, we now know that's not what they were. So this is where, if you've seen The Big Short, which 99% of people have, this is where you get these subprime mortgages from. So the investment bankers are happy. They've just made all their money, right? They're getting all these bonuses. They're giving out all these extra mortgages. These people are happy. They're able to get all these extra houses. They feel like they're really rich, and they're doing really well. Well, what's the problem? Well, this can't go on forever. Eventually, there's going to be some sort of breaking point. But for now, as we saw leading up to it, nobody cared about it. And why did nobody care about it? Well, as we'll discuss soon, it's the culture. And this is quite easily also relates to you in investing as well. The culture that you surround yourself in is what you'll get caught up in. So imagine in the GFC period, you're an investment banker, right? You've been preaching all this stuff and you've been making millions of dollars. These new people come along. They're not going to challenge your views, are they? And you're not going to challenge someone's views who's been in there 20 years longer than you and who's made 10x more millions than you. So what happens? Well, the same culture just keeps going on and on and on, and nobody's worried about the risk because nobody's ever been caught out by it. This is similar to insurance. If anyone's watched the latest Warren Buffett one, they talk about the insurance with the pandemic and they realize they underpriced it. This is all easy to say in hindsight, but you had people like Michael Burry who were running away from the markets and realized, oh my goodness, something's going terribly wrong here. This is what's happening and this is how it's going to get exploited. So what did he do? Well, he essentially shorted mortgages, if you want to look at it that way. That's probably the simplest way to put it. And eventually when they all crashed and people couldn't pay them back, he made billions. And then you had people who also realized that and caught on a bit later that also did really well. So how can this be summed up? Well, the first thing you need to look at, once again, was leverage. Leverage can be exploited, but it needs to be controlled, which is why laws were brought in straight after the GFC to minimize the leverage for the banks and to stop this from happening again. Could this happen again? Most certainly. Banks are still leveraged. You can look up any of them. European banks are more leveraged than US banks. You can look up any of this and you can find it within their annual reports. The finance industry. The finance industry is plagued with greed. It is insane the amount of greed that is in finance. I don't care what bank you look at or anything. You can look at even companies themselves, the amount management pay themselves, and they trust that they will not be exploited in terms of greed if anything goes wrong. Just look at the COVID crash in March 2020, the amount of companies that got bailed out by the government. And the last one I want to talk about is nobody was ever held responsible, and this comes back to culture. There's a common saying, if you owe the bank 1 million, that's your problem. If you owe the bank 100 million, that's the bank's problem. And this is essentially what happened. The banks just got too far exploited, and then because they were selling these subprime packages all over the world, this is why it was caused a global financial crisis, and it wasn't just a crisis within America. So what happened? Well, the governments had to bail the banks out, and everything, all the housing prices all collapsed because people had to start selling their houses because they couldn't pay back these mortgages. And so you had the opposite. Instead of the domino effect going positive, you had the domino effect going negative, and people losing millions of dollars on their housing, which, as we now know, opened opportunities for people. But hopefully this has helped. Hopefully this helps you understand the GFC, and it also helps you understand that this could easily happen again under the right circumstances. Whether the same thing happens again is unlikely, but it certainly could be in a different area. So thank you. Have a nice day.